Episode of Beating Alpha. Today is 68, episode 68. We have a very interesting guest on, as you will see here in a few seconds. But first of all, I just want to read through the bio that this man's assistant sent me, because as I told Joe, it's very impressive, like what he's accomplished so far, and I'm sure he has a big enough goals for this year, even though to what's going on in the economy and in the world, but we're going to cover that also. But first of all, Joe grew up in a Philadelphia suburbs and has been a lifelong investor who started at the age of 19 back in 2001. So over the last 19 years, he has invested in over 100 residential properties and 40 commercial properties. In 2011, one of his private investors led him to note investing, where he bought non-performing mortgages from hedge funds and banks. Joe got in the right time and acquired over 2,800 residential mortgages over the course of 8 years. That's very impressive. So his success in note investing created income and wealth for investors, partners, and founders. So throughout the last decade, his fascination with minimizing his tax bill and beating out Wall Street returns, I love that, led him to participate in many different tax strategies, including company retirement plan, Roth IRAs, traditional IRA, and Act 22 of Puerto Rico. Again, that's something that I never heard before. Maybe we can cover that also in the show. In 2014, he decided to make the move to Puerto Rico and participate in certain tax benefits known as Act 22. With his desire to constantly learn and seek out trends, he ventured into blockchain startups and digital assets. So as you see, this man has his hands full. He's very busy, and I'm very grateful to get some of this busy man's time today. And I'm very happy to have you on the show today, Joe. Appreciate it.
Ooh, thank you very much for having me on today.
It's my pleasure. Again, I think it's going to be a very good show. Again, looking at the bio, as I told you before the interview, it's very impressive what you accomplished so far. By looking at you, I'm guessing, you're not 60 or 50 yet. So, I mean, you accomplished a lot of things while still being in a young age. So, first of all, maybe we can kind of take apart what Joe is like. How did you discover that you want to do all these things, like buying notes and real estate investing, and now going to different ventures as blockchain and, like building different businesses? Like, were you like this before in the school? Like, when did you discover, this kind of potential for the business that you have now?
That's a great question. And I would say, ever since I was little, I always wanted to go out and kind of hustle. Naturally, when I was younger, we used to collect baseball cards. Me and my buddies would go out and shovel snow in the middle of the night. I was always responsible for making my own money and taking care of myself when I was younger. So, back in the, I guess, late 90s, I'm 38 now. So, in the late 90s, I mean, one of the only things you could do is more of a service related jobs on the side when you're in high school most of the time, whether that was landscaping or contracting and so forth. So, in order to make more money, my goal would be to go out, find these odd jobs around the neighborhood, doing stuff for the neighbors, whether it's raking leaves, shoveling snow. And, over the years that just kept growing. So when I was in high school, I decided to start a landscaping company. And, I expanded that. I went to tech school for contracting in my 11th and 12th grade. What was great about that is the tech school allowed you the ability to get out of high school for about half a day, because I never really wanted to be in school. It just wasn't my thing. I didn't enjoy being there. And so I was able to sign up for tech school for contracting, and that got me out for about half a day. So getting out of high school and graduating, I had JR's contracting and landscaping, where I performed contracting and landscaping services for a period of time. And at the age of 19, I moved out of my parents' house and bought my first piece of real estate outside the Philadelphia area.
Yeah.
So, it was the contracting experience that led me to doing the repairs on the property myself. And from there, I started acquiring real estate in the Outer Banks of North Carolina in the 2000s, during the 2000s real estate boom. And that was a very good lesson in the 20s. You know, I started getting into a lot of different properties, and then the market had crashed, right? So here's the, you know, one of the biggest lessons that you learn in life. And I'm so glad that I learned it in my 20s, because today it just has made me such a better investor, is that you just don't over leverage, and that when things get so frothy, there's a point that it does come to an end. And so going through that experience of the 2000s and kind of owning a bunch of properties, and then, you know, having to sell them at a lot of losses after the market crashed, taught me a lot. And I continued doing some contracting work to keep things afloat. And then it was maybe about 2010, 11, I started fixing up properties again in the Philadelphia area. And it was one property that I was flipping that my private lender who had lent me money to do that deal was like, I'm not going to be, you know, lending you any more money. I'm moving it over to this other fund. I was like, okay. I was giving him, I think maybe about 15% or so. So I was like, wow, why, you know, why? And he's like, well, I'm getting 18% over here, which sounds like a high return today. But, you know, 8 years ago, when some of these funds were acquiring assets coming out of the banks, I mean, the returns were a lot higher than they are today, where they're compressed, right? And he, you know, told me to start coming to the meetings. And so I joined the meetings. And then after a period of time, I learned about what it was like to buy distressed mortgages. And this was buying the loans that originated in the 2000s, where the people went upside down and stopped paying. And the bank started selling them off to other funds. And then the funds would sell to other funds. So after attending those monthly meetings for about 6 months, I partnered up with somebody who's already been in the space to work some loans that I initially bought. So this way, it gave me the insight to the viability of the investment before I jumped ship from the full real estate side to the loan side. And after about 6 months, I recovered my full principal that I invested on that little pool to start with. And then I was sold that, you know, I'd rather be the lien lord versus the landlord at this moment. So we started acquiring pools of loans. I partnered up with 2 people. We formed a partnership. We started an office outside of Philadelphia. And from there, we started buying pools of loans. And that would put us into about 2014, where, you know, as we started accumulating assets, there, you know, you start thinking about the tax consequences, right? And it was at a conference that my securities lawyer and I were speaking. And I was like, you know, what is the real deal with the Caymans and all these foreign jurisdictions? Because, you know, Obama at that time was trying to crack down on all this a little bit. And I didn't really understand, because nobody really teaches this in the school system, right? They don't really teach you how to strategically invest tax efficiently. And so he said, I'm not sure, but I heard something about Puerto Rico. And so at that point I went home, I Googled it up, and I was like, wow. And then, so I was looking at maybe moving to Florida at that point anyway, just to get to a warmer climate and no state income tax. And so my buddy's like, hey, you might as well just go do the Puerto Rico thing, because it's a life experience, and it's a 0% to 10% effective tax rate. So I went down there. I booked a flight. I flew down first week. I just booked an apartment and moved down just a couple months later. And so my other partner came down a couple months after that. And the third partner, he went on in a different direction at that time. And that was what worked for him. He wanted to be more at home and stay with his family. So Lindsay and I, you know, we continued that journey, and living in Puerto Rico, and from the fall of 2014 till the beginning of last year myself, I continued to buy pools of assets. And one of my brokers from New York had offered us a pool of REO assets, like residential and commercial, that a Puerto Rico bank was selling. And at that time, that was our first entrance into that market. And we ended up bidding, and we were scared. We were really scared, but we were awarded the deal kind of because it was a unfamiliar market. And at that time, you know, Puerto Rico over the last 5 years has made the news as, you know, there's crazy Zika, the bonds are blowing up, they're in debt, there's these hurricanes, there's these earthquakes, there's just, they've been having a lot of challenges, but that's more on the surface and on the news level. When you actually, you know, are living there and understand what's going on, is never as bad as the news portrays. You know that, right?
Yeah.
Yeah. And so we ended up acquiring that portfolio of assets, and it was, the start of the investments in Puerto Rico. And it was actually worked out to be one of the best trades we did over the last 10 years from a return on investment standpoint. And so that kind of opened up other relationships over the last 5 years for us to execute other deals there. So that takes us up to the beginning of last year. And then last year, I now am married and have a couple kids. And so we just wanted to be back stateside, closer to family, closer to some of the luxuries that are available stateside. Yeah. Everything has its pros and cons of where you live. And exactly. So now, I mean, that brings us up to here and, continually investing in real estate at the moment.
Awesome. So, okay, you kind of covered everything that's been here in the bio. So again, I think that's a wrap. Thank you for the show. I'm just kidding. First, I just would like to go back to the time because, again, I love the fact that you discovered real estate investing while being so young, like 19. Because, yourself personally, there's a lot of people, walking right now on the street or maybe watching this interview and they're like 25 and they have no clue what they're going to do with their lives. So by age of 19, you've been kind of young to discover about real estate investing. And so I want to ask you, why did you decide to choose that path? Because the year of 2000, that was where the .com boom was going on. So you could choose the path to start maybe, a digital company, in a Silicon Valley, be a venture capital or something, right? So why did you decide to follow the path of real estate investing?
That's a great question. Well, like I mentioned, when we were going to school, we never even had laptops, even though I graduated 2000. So maybe we just missed it by a year or two, but we didn't end up having computers in school. So I didn't have any experience with tech or anything. So I just wasn't educated. I wasn't surrounded by those people. And most of we'll call them, well, we said self-employed then, but you may say entrepreneur today in our school was the service related job. So, my buddies that went to school is either you're going to be a contractor, landscaper, electrician. When you talked about being self-employed at that time, it wasn't really all these other things that are available today. And so the contracting is what led me into real estate because it gave me the ability to do the work on the properties. And also through my mother and grandpa, they have invested in real estate. And so that kind of just gave me a direction to go with at that time.
Okay, got it. So you got a little bit of influence. And again, they probably at that time, as you said, there was no choice. There's this is what you're going to do. I mean, it's a physical type of business. It's easier to understand than, running a software company. So it does make sense. So talking about investing, because now I see you have over 100 residential properties and 40 commercial properties. So again, you're diversifying a little bit when it comes to the real estate. So is there something that you would prefer? Because I know the numbers are different and it seems like, there's 100 residential properties, but maybe those 40 is going to be 15,000 units, who knows? Because it might be multifamily. So what do you prefer, long-term? Is it going to be residential or commercial?
So are you saying what asset would I prefer to hold over a longer period of time?
Yeah.
I mean, right now, if someone's looking at it and they're looking at it from a strictly scalability point and how to accumulate the greatest amount of wealth, I mean, you have to go commercial because that's just the bigger the number, Mm-hmm. And then within that commercial realm, obviously, multifamily is a hot ticket. Everyone needs housing. I don't think that's going anywhere. And then beyond that, there's still going to be the desire for certain office space and warehouse space. And so I would look at those few classes. Retail, I don't know where that's going. My opinion there is it needs to be modified to somewhere where it's more micro type of retail and more of a display storefront. So an example would be you want to buy a computer right now. I was just going through this. You want to buy a computer. You want to go and touch, feel them, and maybe use them. But most of the brands are now not displaying those items. So I kind of envision a micro store where you go in, brands can lease out that space. They could display their items. You could view it. You go in with your phone, you hit it with a code. If you want to buy it, it's delivered to your door instead of walking out with it. So it takes a lot more space. I think we're going to see trends like that.
Yeah.
And that's
I mean, Amazon is doing it.
Yeah.
If you just follow, because Amazon is going to kill all the retailers, all the warehouses. I mean, it's, this conglomerate. So yeah, so from the 40 commercial properties that you're having, like what will be the percentage of multifamily deals that you have in there?
So a lot of the properties within, my experience portfolio have been assets that we've, bought and sold. Out of all those assets, I think 3 are multifamily, and I think they ranged anywhere from 5 to 20 units, I want to say there.
Okay.
And then there's also a handful of office buildings, ranging anywhere from, a couple thousand to 30,000 square feet, I want to say.
Okay. So what is the current plan? I mean, with the residential and commercial properties, probably you had a little bit different plan before the end, before the start of the year, and probably you have to adapt a little bit and shift. But like, are you planning to hold or sell some of the properties, either residential or commercial, this year, or what is the plan for your business?
Continue, we have a continuous pipeline, of where we're acquiring properties and selling properties. So we also look at markets that we feel are more in a recovery stage. And maybe what I mean by that is, I think over the last decade, what we've seen, certain markets have run up in certain time frames a lot higher than other markets, and some relate to recovery. So example would be like Puerto Rico. I believe Puerto Rico had a late stage to the recovery because they probably bottomed out like 3-4 years ago, which means they were probably about 5 years behind the US. So US opportunity to buy was like 2009, 2014, where Puerto Rico was kind of 2015, 2018. Does that make sense? And so when we look at different markets, we look at where they at in their own cycle within that own sub market, right? And so recently, last year, I've been acquiring more real estate back in the Outer Banks of North Carolina. And the reason why I've been doing that is because it wasn't until about 18, 24 months ago did they actually start seeing the inventory start ticking up. So they just started recovering from a decade ago. Does that make sense?
Mm-hmm. Yeah, yeah.
So when we go into a market like that, we'll acquire the assets, and then we'll look at somewhere between, let's say, 1 to 5 year liquidation curve. And that kind of just depends on where that sub market is going.
Yeah. Okay. Got it. So, but all the deals that you're currently looking at is all based on North Carolina. So somewhere around there in the same market. Are you looking other states as well?
Well, mostly in the Southeast and Puerto Rico. Those are probably the 2 areas right now is that where we're focused.
Okay. Got it. Yeah.
And that's, like I said, that's based on the trends, demographics, and everything that's happening. You know what I mean? You
Yeah.
see it on the news, right?
Well, you of course, for the statistics based on your investment decisions, you probably don't follow the news for that. But yeah, but you basically, so yeah, because I think people would love to hear, about saving, a ton of, taxes by Act 22 or Puerto Rico. So maybe we're gonna discuss that. But first of all, do you still do the note investing at the same time right now?
That's a good question. I have one partnership that I'm invested in that has been acquiring some loan portfolios one off as the opportunity presents itself. But over the last 24 months, maybe even 36 months, we found the opportunity to kind of be non-existent when it comes to a value add or a opportunistic pricing. A lot of those returns have compressed, and the offerings have been put out to the public, which means that they're kind of selling it on a loan level basis, meaning there's a lot more bidders coming in and you kind of get stupid money. And that's kind of when we are not buying.
Okay. Okay, makes sense. So, okay, so let's talk about the Puerto Rico, because I think a lot of people will love to hear that. And the fact that, you can save a lot of money on taxes, and, you can, by opening an LLC, or basically, so if you run through the requirements of what you actually need, because you probably need to get some sort of a, resident card or whatever that may be. So what are the requirements for you to be able to open, a business, or to just to save on taxes? What is the process for people to do that?
Got it. Over the years, they have changed. They frequently change the requirements a little bit. So I'm going to give like the high level and keep it easy. And obviously, if anybody wants to reach out to a tax lawyer, that's probably best. But for us U.S. residents, Puerto Rico is a territory, but is considered part of the U.S. And so Therefore, for us to make the move there, you physically need to make the move. You find an apartment to rent or to purchase. And once you establish that and you have your utility bills on and a lease, then you could go and apply for a driver's license.
Okay.
So you don't need a passport or anything different when you're a US resident. So once you establish the residency and you have a driver's license, the laws state you got to stay there for over half the year. You got to be a resident and reside and be on the island for more than half the year. And once you fulfill those requirements, I mean, you're pretty much a Puerto Rico resident, and then you can take advantage of the Act 2022, which now I believe is called Act 60. But basically Act 22 is where you could pay up to 0% capital gain tax on your investment gain income. And so that's going to include assets like securities, stocks, cryptocurrency, if you invest in mortgages. It does not include U.S. stateside based real estate, because U.S. taxes real estate within the U.S. Now, it also can include like the sale of, if you have shares of a private company or you're going to sell your company, that would fall into that bucket.
Okay. So the taxes from real estate, let's say, are they going to be deferred, or is just you don't pay taxes at all?
So the taxes on the real estate side, if it's a U.S. based asset, you would pay on the U.S. federal level.
Okay.
Does that make sense? But all investment assets in Puerto Rico fall under the 0%. So if you're investing in the real estate in Puerto Rico or mortgages or anything within the island, that's going to fall under the Act 22, which is going to be considered 0% tax rate.
Okay, got it. So have you explored other tax strategies before moving to Puerto Rico? I mean, what have you explored, and what do you think might be another option when it comes to, tax strategies?
So I guess one of the biggest ones that most people use is through the qualified retirement plans, right? I mean, that's utilizing their 401ks, Roth IRAs, or regular traditional IRA. Personally, over the last 10 years, I've been involved in, we had a company plan when we had our office set up, and then I rolled that into a traditional IRA, and I have a Roth IRA. So currently I have a self-directed accounts at a couple of the custodians where I direct them to invest in certain assets on behalf of my retirement account. And I've been doing that for the last 10 years.
And those assets will be commercial properties?
Those assets are interest in private companies, interest in like venture startups.
Yeah.
I also have, some digital asset holdings and some stuff through a brokerage account.
When you're talking about digital asset holdings, you're talking about the blockchain, right?
Yes, we're talking about cryptocurrency, Bitcoin, and so forth. Correct.
Yeah. Okay. So maybe that's the topic to explore, because again, what's going on with the COVID right now? I would love to hear your thoughts on that, because if you're invested, I don't know if you're invested heavily, and that's at this point I will call it an investment, but maybe it will become a currency that we're going to use worldwide. So that will be kind of a question, because looking at the banks, there's already news floating around saying that the banks are going to move towards digital currency at some point, which I think that will skyrocket all the blockchains, like Bitcoin, any crypto, it will skyrocket to the insane price, right? So anybody who's holding, I mean, the answer is clear what's going to happen with their wealth, right? So what do you think, is that going to be soon, or is this going to happen? Like, is the blockchain is going to take over? Like, what's going to happen with the crypto in the future?
Well, I think is everything that innovates, including like the internet, that when people look at things, they are very, I guess, like say short-sighted, and they can't quite understand how long things take until they look in the rear view and realize like, oh, Uber's 10, 15 years and look how big it is, right? And so while we're about 10 years in since Bitcoin started, it still is a 20, 30-year process, right? I mean, that's what happened with the internet. And so when, you see everything that's going on in the space, people kind of don't pay attention to it because they don't really understand the final product yet. And so that still might be 10, 15 years out. When it comes to the digital currency, I mean, I've been saying to my, some of my teammates the last couple of years is that I fully believe in the digital currencies of the different jurisdictions, or I even said there should always be some kind of like universal global coin, which is almost like the dollar right now, I guess, where, it can transact around the whole world borderless.
Yeah, yeah. Well, it could be. Again, we're just guessing. I'm sure you have a lot of information on that, but that could be a totally different topic, and it could be a different podcast episode right here, just on a blockchain and the crypto. Because again, like what's happening now with the COVID, and that's a very smart way for. Again, we're not going to go to the dark side and say, like, oh, somebody's just looking to control some stuff. But look, they're trying to get rid of the paper money because it spreads the COVID or whatever they're coming up with. But, it's going to happen at some point. But I think I just seen that on the news a week ago. I think it's going to happen where a lot of people are going to get ripped off. A lot of people, of course, in the beginning, people will pay that price because some of the people are just naive, right? And, so like in Ireland, in 2 months, probably more than that, 3 million euros were stolen, like from the people who used to get the phone calls and saying, listen, do you want to buy some Bitcoin? And people just gave the credit cards and, like, so the people access, their finance. And so those situations will happen. And, because people don't trust with the money that they have in their pockets. So it's hard for them right now to trust the money that's nowhere. It's in a digital space somewhere floating around, and you just trust that it's worth something, right? So it will take some time for people to get used to it, but it's a fact that we're getting there. We go into that direction.
And two things with that is that with innovation comes a lot of failures, right?
Yep.
I mean, and people got to understand that. So, in the last year or two, there's been some hacks, there's been loss of funds, but what that does is create better protection moving forward. Now people got to repair that. And so that is just the natural evolution of everything in life. Everything must fail multiple times in order to, create a final product. And so that's why, people may look at it as a negative thing, but I mean, that's just the way the journey goes.
That's true. That's so true. I'm very glad that you cleared this out, for the people. Yeah, because again, I'm not trying to sound negative, like I'm against the thing. Like you can be against for it. You're not gonna stop it. Like it's what you said. It's an evolution, and it's gonna take us there. You want it or you don't want it. So if you don't go with the times, you're gonna live behind, and you're gonna, say, oh, listen, like 10 years ago, I should bought, So make sure you do your own research and due diligence on a crypto. And I have a lot of people who have a big interest in that, and they heavily invested in the crypto as well. So
and one other comment on there is, when it comes to like money laundering and so forth, cash is still number one. I mean, people just don't understand that. That is the dirty dog of them all. But the government's not willing to say that cash is the dirtiest of them all. And so I think, there's just misconceptions out there when the news puts out certain articles.
Yeah. Oh, definitely. People know already. They shouldn't trust the news. The majority of people know that already.
So, and also, hey, one more, just so for listeners, is that in the real estate business, if people are aware, there has been a lot of wire theft frauds over the last year or two with everything with real estate transactions. So, while someone's like, oh, there's a crypto theft, but someone doesn't realize people are going through wire frauds right now when they go to do a closing and they accidentally send it to a different account because someone intercepted the wire and instructions. And this is from, centralized services working together, and they're still not able to do nothing, and they have to file a report. So fraud's happening everywhere.
Oh yeah, for sure. Definitely. I agree with you. So what about the different startups? Because again, I'm just looking, you moving your own, energy and thoughts and capital to different ventures. So as you mentioned, you have a digital assets, which again is the crypto. Like, so what else did you explore so far, and what else are you planning to move to, with your time and capital in the future?
So we have moved to some of the startups through the crypto space, and that's either around tools for trading your crypto if you're a trader, managing your portfolio, exchanges, and different protocols that could do different things. And moving forward, we're also looking at ways that, like through the real estate and prop tech and how they will integrate. you know, how the records will be placed on the blockchain and so forth. So other startups we're looking at right now even includes a drone-based imagery, you know, where you could order instantly, you know, image of a certain property, and then somebody goes out, takes it, uploads it to the system. That's one example that we're looking at right now.
So for what type of service that would be, like, you know, give an example.
Real estate. So let's say you want to buy a property or you own a property and you want to get today's view over bird's eye view, street view, everything, and see the condition of it from the exterior. Okay. You could go on, place an order, and then it goes through a service, and it's almost like an Uber where they get a pilot within that area that goes out, takes the imagery, and it gets uploaded to that system, and you get the report back.
Yeah, that sounds like a good idea. Like, I don't know if I would be a fan of a drone flying around my house, and you know, it's like, what's going on here? But yeah, I do understand I mean, so that again, like, guys and girls who are watching this, I mean, like, you know, Joe, like from your bio, again, you're heavily involved into real estate again, and that was the start of the entire business and like your journey in the business world. But like, as we're talking right now, I do understand that you're putting a lot of your time, well, I will be guessing, but you know, maybe 30-40%, I don't know, maybe you know the number. You're putting a lot of time and effort towards what's going to happen in the future, and you know, investing time and money into different ventures, which is great, because there's not a lot of real estate investors do that. And for the simple reason, because they trust real estate is the holy grail, right? Like, you should be full in, like 95%, maybe 5% in stocks, but that's pretty much it. So it's very phenomenal to hear you, you know, talking about crypto and, you know, doing different ventures, again, similar and connected to real estate business in some way, maybe, but it's pretty awesome, you know?
What people need to realize is that, and be aware of more, is that we're moving to a pretty much full digital age, right? I mean, all these assets are going to be digitized in some form and being able to trade across borders, right? We don't know how it all plays out over the next decade when it comes to regulations and so forth, but there's already existing projects out there that are starting to digitize and tokenize part of these real estate assets and offering them to the public. You know, so much automation that's happening in the space, and that over the next 20-30 years, I mean, it's just going to be automated smart contracts that are buying and selling properties. I mean, you know, Opendoor and these other iBuyer companies, Zillow in the US, they're already, you know, leading the charge the last couple of years, buying and selling real estate, and they're collecting all this data, and some of them are losing money, but they're just doing it so they could collect all this data. And they're going to be able to build machines that can basically buy and sell real estate without any intermediaries.
Exactly. So it's all about the algorithm and data. In this day and age, data is everything. Amazon is based on data, you know, so they collect tons of data. Everything, like the business is data, algorithms, numbers. So that's what it's all about. So talking about, you know, real estate, back to that part again, for the people who are watching, they're thinking, good, Joe, good for you. 100 residential properties, 40 commercial properties, doing, you know, different ventures, different businesses, having all the success that you achieved right now. It's like, but where do I start? You know, in these times sort of you know, maximum amount of uncertainty, maybe there's, you know, I don't know if the job is going to be around for that long. What will be your advice for those people?
Well, being a little more seasoned and older and growing up, I've learned that, you know, as you get older and wiser, that it's better to choose something that you're more passionate about than chasing the dollar, right? So as you go through your daily activities, you should take note on what kind of gets you excited. You know, where are you spending the most time? Like if you're on your phone searching stuff, what are you studying the most that is intriguing? Because I would bet that that's the path you want to start leaning into first, because you want something that engages you, that you're willing to spend whatever hours of the day that you want to do, because it doesn't feel like work. I would at least start there.
So follow your passion is basically what you're saying, right?
Yeah, and that can always be, you know, that can always be misconstrued, because, you know, passion's sometimes hard, but I call it more something that like just gauges your interest, right? Like, so if you're surfing the web looking at Zillow residential properties every day in this certain location, you just start to mentally know it because you just study the values and you just find yourself excited there. Then, maybe you want to start looking at that avenue and start placing some offers, figuring out who you could partner with first in that area. I mean, I understand most people getting started have no capital for the majority of people. So that's
Mm-hmm.
always the hardest part to get the ball rolling. And so from there, I would say what has worked for me at least is attending meetups. Now might be virtually, but they'll be back in person, and getting to find the right people, and maybe even older people that have real estate experience now that just want to place capital or find a partner to do all the work, and partner with them, be the person responsible to do all the work on the project. And that's kind of what gets the ball rolling.
Yeah.
And then that starts building a resume of experience for you to go out and raise your own private capital at a later date.
Okay, that's a good advice. Thank you. Thank you for that. Thank you for sharing. Again, because there's a lot of people who have, a big interest into, let's say, oh my God, look at Elon Musk. He's building all these cars, rockets. Maybe we should follow that. That's very exciting. But it's like you have to look at the current situation. And again, I do understand what you're saying, like your interests, but because maybe that's where, again, behind the passion, there is some skills also that you might be like, if you like, let's say computer, like softwares, and you just, as you said, scrolling on the internet, you're looking for that. And maybe that's what you go and study, maybe deeper on a certain, on a deeper level to build some valuable skills that you can bring to the marketplace that they would pay you for. So yeah, definitely, that's a great advice for people. So talking about the books, I don't know, are you still, I'm sure you're still an avid reader. Some books, like top 3 that you would recommend for people to read right now, because again, time is available. So I think people should read.
So good question. I'm not really a reader. I've always struggled there. I'm one that's hard to pay attention and follow the words throughout a whole book per se. So what is working right now, I would say for me at least, is YouTube. It's like micro TV. So there's certain, let's call it influencers, you would say, or you can even call them a coach or a mentor, depending on how you're utilizing that content.
Yeah.
And you hone in on those few. And typically, a certain part of the day or at nighttime, I'll watch these videos like at 1.5 to 2 times the speed and digest that information. And that's how I am, I would say, leveling up now when it comes to my own personal reading. I'm taking that information out that I need because I think it's a more direct point in which you can consume info. So if you need to know, example, how to set up an IRA, you could find the right video quicker. It could give you an instruction within 10 minutes versus having to fulfill reading a book for a few months.
Oh yeah. Oh yeah. That's for sure. Cause you get, like an answer on the spot there. And of course there might be some misinformation as always. I mean, you just have to do your own due diligence and kind of maybe go with the gut feeling, because there's a lot of, misinformation like on internet just in general. But yeah, YouTube is definitely a great source. So what would you recommend for people to follow? Because let's say it's real estate based, like who people should follow besides following you also.
Wow. I don't know if there's anyone in particular per se. I would say is because, like I said, it's very important to hone in on who is in your particular asset class, right? So like if you're a guy, let's say Grant Cardone is obviously a big influencer on social media. His whole goal is class A, $50 million, multifamily across low income or low tax states and sunshine, right? And so if that's your box, you want to follow that guy. And I think that's the importance. So someone who's in a residential real estate and they're a house flipper, they're going to want to go and find those top 5 flippers that give them the best information about finding the property, buying the property, selling the property, and the best marketing techniques you can use throughout that process.
Okay, yeah, that's a great great advice. Thanks for that. And again, you mentioned social media and marketing. So again, we connected on Instagram, as far as I remember, and that's the way to go about. Like in these days, as you mentioned, you're moving towards ventures when it comes to like digital ventures, crypto, and blockchain. So and social media is part of these digital products that are available to people, in a fingertips. So what marketing approaches would you recommend for people, either already established businesses or maybe for the people who want to start a business? Like what platforms should they use and what should they do on social medias?
Well, I think the most important point is just to document your story, right? And what you're doing on a daily or a weekly base. And that just gives a better connection to other people out there. People are looking to connect based on the story that's behind the person posting. Now, across the different platforms, uh, I guess is if you already have a dominant platform that you have a lot of followers and a lot of engagement, I would maybe just start there because it might be easier for you than going somewhere new and trying to build a new base. If you don't have any existing platforms, LinkedIn right now has been very good when it comes to business. There's, I think, just a more professional crowd there. I'm not so engaged on the Instagram per se on the high or the older demographic. I think Facebook seems to do a little bit better when it comes to the business and the older demographic and like investors and so forth. It's probably my input there. So for me, it's been more LinkedIn or Facebook.
So no TikTok videos, no?
I told the team to put a couple together, but I don't think they've been really doing too much there. I feel, look, at the end of the day, I mean, if you could hack up the content, post it everywhere, I mean, you give it a try for a month or 2 or 3 months and, see what comes out of it, measure it from there, because you really just don't know. But sometimes people can't focus. So sometimes it might be better just to focus on one platform where you get the most traction and hone in until you kind of expand as far as possible and then look at another one.
Well, definitely agree with you on that one. And I would like to add up again, as you do same in a business, like diversifying across multiple platforms. Again, it should be, a thing that people should think about, particularly people in real estate industry, because we spend a lot of time talking with real estate investors globally. And that's our message always. You have to diversify your marketing efforts, particularly in this time, because again, everybody's at home. They don't go out that much. Again, social distancing, everybody's watching TV at home, which is nobody watches TV, maybe when the news just up, but everybody sits on a phone, and they're scrolling on different platforms, which again, the ones that you mentioned, LinkedIn, Facebook, Twitter, YouTube. So if people and companies themselves, and that was the talk before I did, before the preparation for the recession disaster, which was supposed to be, but it turned out to be the COVID thing, right? I said, listen, everybody have to be prepared and you have to hammer on the marketing because that's where the attention is going to go. So I think people should still, I know it's a lot of time, effort, but they should market, because when you market yourself, like, look, great things do happen. Just like us, connecting here and having this great talk, you providing value to the people, that wasn't happening if we couldn't connect it.
Yeah, I agree. I just was on, just had an interview and the guy, left it off with network equals your net worth. And
exactly.
The older you get, the more you realize that it is all who you know, because the easier you can connect with people, the faster you can solve your problems. And when you're running a business, you always have problems on a weekly basis that you need to solve. So the more people that you know, the better you're going to be able to do and the faster you can move. And the way to do that is to establish a lot of relationships and build a trust and authority online. Exactly. Same as like, it was like you'd be going to local meetings.
Yep.
But you could get thousands and millions of people.
Yeah. Yeah. Everything is in arm's reach right now. I mean, like you're in the States, I'm in Ireland, and we just talking over like digitally over Zoom, people get that content, people listening to this episode right now on the podcast. So that's the way to go about, in this day and age. So people should put in time and effort, to go and at least connect with the people just like yourself. So before we finish off, I want to ask you, a question about scaling and building a business. Because again, business owners, I know everybody got excited before the 2020. It was kind of beautiful number, right? It's kind of magical number. And then this, thing hit the fan. And kind of things turned out to be a little bit ugly, right? But I'm sure you had a business plan for this year. So I still know that you're going to continue and follow through with your business plan this year, but what are you planning to accomplish for the upcoming year also? Can you share some of that?
So coming into 2020, it was for us, it was actually a little bit slow on the real estate acquisition side, because what we just went through the last couple of years, prices got to a point that, it typically doesn't fit our business model. Our business model is to buy when no one's buying, or to buy distressed assets, not, at the top of the market. So once COVID hit, we were under the impression, within the first month, that we thought that the next year or two can present a very big opportunity in real estate. And now we're a few months down the road and we're not quite sure. And the reason being that the government is kind of propping up a lot of different things, and we just don't know where they're willing to go or where they're not willing to go, right? And so while there's a lot of default in the market, we don't know what we're going to actually see, or where the government might step in and actually, prop that up. So as we're looking at the business plan for this year, we actually, the last couple of months, ended up, getting quite a bit busier than we anticipated. And I'm not quite sure why that is yet, but so far, we just have some certain sellers in areas that are willing to sell some portfolios of assets privately to us. So it's working out very well. Okay. Our goal, for this year and into next year, is we're keeping an eye on the pulse of what we think is going to happen and what kind of distressed opportunities come into play, because right now it's still very unclear. So it's hard to make that plan, but we are preparing by, raising a certain amount of capital, setting up capital partners, and we'll be looking at those residential and commercial assets as they come about. There is some bankruptcy stuff starting to show through right now. We just bid on a deal that we actually lost, or couldn't execute, and the bid went way high. So there's still some crazy buyers in the market. So when it comes to the business plan, I would say our goal is, we're ready and set with capital and the experience to execute on what assets come out, but we just don't have clarity around what's going to happen yet with the government here and what they're going to prop up.
Yeah. Makes sense. Totally.
Does that make sense? I mean, I think that's kind of a little bit across all industries right now. Like everything's a little gray, where everyone doesn't know what is really going on and what's the reality of this. There's a lot of talk about,
it's waiting game a little bit now. So
there's a lot of talk about next year, a lot of opportunities coming to market, but then, there's other reports that are saying there's a shortage of housing inventory. So it would absorb any of that. And so we're just not really sure, I would say.
Yeah. Oh, I totally understand that the current times are kind of, shaky for a lot of people, in particular business owners, but at least you are in a position where you can make some moves and, and look for acquiring, good deals in a good locations. So I would like for you guys to go and connect with Joe, because again, he has a ton of great content. I know you're available on different platforms. Again, you have a website, Facebook, Instagram, LinkedIn, Twitter, YouTube, podcast, which is called The Joe Robert Show. Make sure and go and subscribe that on iTunes. And it's been a great pleasure to having you on. And, I had a really good time talking with you. And again, first, probably real estate investor that we have in a show that is talking about investing in a blockchain, different ventures when it comes, to kind of, software kind of type of, new age businesses, which is awesome, which is awesome. I really, I'm a fan of your stuff. So of your business approaches. So guys, again, if you enjoyed the show, make sure to share this with your friends. That's all I'm asking, because in times like these, they need those, golden nuggets to kind of wake them up and show them, hey, look, there's opportunities around. Just start listening to the right people like Joe and get their advice, implement, take action. And you'll see that one day, the more you do, the more good things will come out as soon as possible. So guys, really appreciate you watching the show. Joe, thanks for being on the show. Really appreciate the time and effort. And guys, as always, I'm going to see you on the next episode. Thanks.
Thank you very much.